To boost Ghana's economic reform efforts, the International Monetary Fund staff and the government of Ghana are in the process of concluding on the first review of a $3 billion program. The program aims to support Ghana's economic recovery and foster sustainable growth. The agreement marks a crucial milestone for the country as it continues its journey towards fiscal stability and increased investments. Ghana and its official creditors now quickly need to agree a debt restructuring plan to get board approval and receive the money. This morning from Accra, Ghana, I'm being joined by Emmanuel, Amoah-Darkwah partner, C-KADD Global. Thank you so much, Emmanuel, for joining us on the show.
Thank you so much for having me. It's always a pleasure to be on News Central.
Now, last week, thousands of Ghanaians took to the streets demanding the resignation or the removal of the Central Bank of Ghana over mismanagement of the economy during the worst debt crisis in a generation. Does this latest agreement between the IMF and Ghana douse that tension now? And does it also give a breather for the country to deal with its debts?
Thank you so much for having me. And so there are a couple of issues that these protesters raised. The key of them is that the Bank of Ghana posted 60.8 billion loss in 2022, which was largely caused by the domestic debt exchange program. And so the Bank of Ghana is the lender of the last resort and also the banker for the central government. And so once we had to go through debt restructuring, the Bank of Ghana had to shoulder the burden of government. Hence, the Bank of Ghana underwriting that amount of money, which led to the loss of about 60.8 billion Ghana cedis. And that is what it was key in terms of why the protesters were protesting. With regards to their latest statement, seeing signs of improvement in Ghana's economy, I think among others, it will help douse the tension as to the pressure that these protesters are putting on the central bank governor to, be kicked out of his job. Because once the IMF deal is, the first review is saying that we are doing some level of progress. We have sustained macroeconomic, stability, at least in the past 4 months. I think it's a sign to relieve the tension of the central bank governor, who has a lot of people are calling for his head to quit his job.
Now, Ghana's economic crisis is said to have been brought on by spiraling public debt. But then when you look at it, you discover that it is not inevitable when you look at the issue of global and domestic economic shocks that a lot of countries faced. Ghana was not the only one that has to face that, but then government would have to source for funds to fund their expenditure and, of course, to run the cost of governance. So do you think that is explanatory or a tenable reason why Ghana incurred debt during that period?
That's a good question. But as I have already hinted on other media houses, Ghana's current economic crisis was not only caused by exogenous shocks, but there were structural domestic problems that the economy has been facing over a period of time. Before the 2020 election, I had the opportunity to do research work for a think tank, assessing Ghana's revenue and expenditure over the past decade, from 2010 to 2020, and also making projections into the medium term, from 2020 to 2024. Whoever wins the election, how was the government going to fund these promises they have put in their manifesto? The conclusions were clear that whoever won the 2020 election was going to face some difficulties because revenues have been underperforming over the past decade. At the same time, expenditure has been skyrocketing, which leads to a ballooned fiscal deficit, which also culminates into our public debt. And so there were structural problems of Ghana's economy, but this was exacerbated by the external shocks as we saw in 2020, 2021. And Ghana had to suffer the brunt of these external shocks. But I must say that it was not only the external shocks, but the Ghana's economy had other structural domestic problems that the economy was facing even before COVID hit in 2019.
Let's now wind back to May this year when Ghana's Finance Minister Ken Ofori-Atta said that the first $600 million tranche of the $3 billion three-year extended credit facility was received. So would that mean that with the first tranche that was received and disbursed, it actually did not make any impact on the Ghanaian economy? Because, of course, we are looking at domestic and external debt restructuring. We're talking about spending cuts and other fiscal adjustments. So does that mean that the intervention that was gotten from the $3 billion, that is the $600 million in the first tranche, it actually did not mitigate or create some sort of buffer for the Ghanaian economy?
Well, the $600 million was not going to solve Ghana's problem in its entirety. It's part of the tranche disbursement, and that was the first tranche disbursement. What it was supposed to do was to cushion our balance of payments. And once the balance of payments is cushioned, you expect that your foreign reserves will be cushioned as well. Once your foreign reserves also is cushioned, we expect that there will be some stability in terms of your exchange rate. Once your exchange rate is also performing well, we expect it to affect the monetary policy rate and also the lending rate. And it's a cycle. We expect it to affect all the other macroeconomic indicators. And so for the first $600 million, it was not supposed to solve all Ghana's problems. We are in a crisis. We are on a program with the IMF, and it's a gradual procedure. And so it has caused some level of stability, as we have seen in the past 4 months. The dollar as against the Ghana cedi, we've seen some relative stability. Again, same with the pound and also with the euro. With regards to inflation, inflation has dropped from around 50% to about 40% as I speak to you now. And so we expect that these marginal gains will be sustained. Once these marginal gains are sustained, we expect the other macroeconomic indicators to also follow suit. And by and large, we expect it to trickle down to the microeconomy, whereby Ghanaians will have lower cost of living and also improve living standards. And that is what we have to get to in the medium term.
So deducing from your response, Emmanuel, it means you are more confident and you're, of course, satisfied with what the Ghanaian government and the PIGS Bank has done in terms of the exchange rate, the external positions, and, of course, the declining inflation rate. So now that we are at the phase of negotiations for another tranche, another $600 million, now what conditions or preconditions do you think can help Ghana secure this particular deal?
So for the first review, as we have done, there were a couple of things in terms of what we call indicative performance and also structural benchmarks, which includes, among others, to introduce some new revenue bills. And over in a few months ago, government will have to pass some trade revenue bills and also rationalize expenditure. Government of Ghana is making some steady progress in that regard. Also, government of Ghana would have to submit a new energy debt recovery plan. And also added to that will be Ghana would have to also submit a new financial sector recovery plan, because the domestic debt exchange program affected the books of the banks, and some of the banks even posted losses. And so in recovering from all these losses that these banks incurred, what is the strategy going forward? And I think these are the matrices that government of Ghana has been able to satisfy, hence leading to the staff level agreeing that Ghana has been able to pass the first review, and hence submitting it to the board of the IMF for the disbursement of the next tranche, which is about $600 million. And so to conclude on that point, I must say that government of Ghana has recorded some level of gains in terms of fiscal side and then on the monetary policies that government of Ghana has implemented since May 2023.
We are well aware that Ghana's economy is being championed by the export of cocoa and gold. Now, if it is able to secure this next tranche, what aspects or what areas of the Ghanaian economy do you think needs dire intervention?
I think this is also going to be a balance of payment support. We are yet to receive the statement when it is approved, but largely this is a whole balance of payment program, the extended credit facility program we are currently rolling out with the IMF. And so I think by and large it's going to be a balance of payment support. Once we receive further balance of payment support, our reserves should be cushioned. Once our reserves are cushioned, we expect that our exchange rate will be stable. We expect that monetary policy rate will trend down. We expect that lending rate will trend down. And we expect that by and large, inflation will also go down. And so I think it is going to be a balance of payment support to add up to what the government has been able to achieve so far in the past 4 months of implementing the IMF bailout program.
Well, the government of Accra, or the Ghanaian government, as we know it, aims to cut around $10.5 billion in interest payments because, of course, you talked about prunings now on its external debt over the next 3 years. Now, how well do you think this implementation plan will expedite agreement and, of course, the release of the next tranche?
Before the IMF agreed on our program, we had to get what we call financing assurances from our external creditors, which gave the IMF the green light to give us this program. And we expect that, as you have mentioned, government wants to, save about 10.5 billion in terms of external debt restructuring. The Ministry of Finance has hinted that in the course of the week, the plan will be submitted to the external creditors. I must indicate that it is going to be very tough, but it's doable because there are many classes of these external creditors. We have the bilateral creditors, of which China is an important player. We have multilateral creditors like the World Bank, the IMF. Ghana is also indebted to these institutions. With the commercial side, in terms of Eurobond holders, that is where the problem largely, as my analysis will point out, that is where the problem is, because the players are many and they have diverse interests. And so for government of Ghana to succeed in negotiating with these, external creditors, especially the commercial creditors, I think government will have to put up a credible plan that will assure these external creditors that in the medium term and in the long term, government will be able to amortize the existing debt. I must also indicate that since December 2022, government of Ghana has suspended, our payments of our external debt. And so there should be a credible plan that must be presented by the Ministry of Finance to give some level of assurances to our external creditors that this plan is credible and that they will buy into that. That will also, by and large, feed into our next tranche disbursement, because that is very critical if we should get the next disbursement of another 600 million going into 2024.
Well, even as Ghana looks at wooing the creditors to buy into their plan, of course, it's also needed that they also look at what the investors might be considering. That is talking about the Ghanaian bonds now. Now, according to reports, the prices of Ghana's international dollar bonds rose by 1.1% on the dollar on Friday, although it actually suffered a minor relapse before due to a widespread sell-off in the global debt markets. But for some people, 1.1 cents might appear insignificant to some. But does that show a bit of hope over the restructuring deal and what might come thereafter?
Definitely. These are early days. As you mentioned, it has to be sustained. And so for Ghana to get that, relief on its debt, it has to be sustained. And so I think that going forward, it's all about the credible plan that the government of Ghana will present to these creditors. Once they accept this external debt restructuring, we expect that there should be some level of respite in terms of interest payment that government of Ghana will have to pay to these external creditors. But I must indicate that going forward, we should look at our debt composition, which largely in the past 10 years has been dominated by external creditors. The whole problem is, why do governments borrow? Governments borrow because their expenditure is beyond their revenue. So going forward, the solution should be, how do we find credible means of raising revenue internally, and also looking at the external sources of funds for government, so that we do not incur a lot of external debt. Once you have a lot of external debt sitting on your books, Once there are exogenous shocks, we should know that it will affect your economy. And once investors are also upbeat about your economy, they will also sell out and grow. And so going forward, it's all about the composition of Ghana's debt. Let's do our best to be able to restructure our debt. Let's raise a lot of domestic revenue, rationalize our expenditure, reduce our budget deficits, and by and large, reduce our public debt.
But then, Emmanuel, you would want to agree with me that the domestic market is also affected by what happens within. Talk about government policies, talk about the status of the economy and what obtains. So fine, it may have some sort of insulation against the rates in terms of the cedis and the dollar. But then when you have restrictions and issues within the economy, the government might not be able to raise the kind of amount it needs domestically to fund its government. That is why they probably want to look out. And of course, when you have an external body or institution or person that is willing to offer the kind of amount that is needed for government to fund its administration, do you think it will be just viable or sensible for that government to go ahead and seek that needed support financially from those outside that can't provide the adequate needed fund, of course, for running its administration?
Well, as I mentioned to you in the earlier comments, we did the study of 10 years, looking at our fiscals in terms of our revenue and our expenditure. And it's clear that revenues have been plummeting over the past decade. At the same time, expenditure has been skyrocketing. But we have to look at all those two legs of the Ghana's economy. If you look at the external component, the expenditure component of Ghana's budget, largely has been led by interest payment. Why interest payment? Because of the volumes of debt we have on our books, followed by compensation to government employees. Then we have statutory payments following suit, and then goods and services. And so we have to look at how best we can rationalize expenditure, especially in terms of reducing procurement breaches, in terms of improving upon efficiency in collection of taxes, in terms of looking at how best we can reduce corruption. Once you're able to do these things, then you don't have to go onto the external market to borrow, because we have seen that since 2007 that Ghana raised the first Eurobond. It looks like Eurobond has been an economic policy. Almost every year up to 2020, Ghana has been raising external debts through Eurobonds, and which are very expensive bonds. That is why we are here, because of the balloon public debt. That is why we have also sought for a bailout program from the IMF. And so I believe that in solving the problem, of course, there might be external sources of funds, but domestically, what can government do? In terms of revenue mobilization, we have been speaking about widening the tax net. Why are we not able to rope in the informal sector to also contribute their quota in terms of contributing income taxes to building Ghana? And the data is clear that there is a potential that Ghana will be able to increase tax to GDP from about 12% to 20% if we're able to do the things that I have mentioned in terms of improving upon efficiency in tax collection, reducing corruption in tax collection, and also looking at how best we can rope in the informal sector to contribute their quota to building Ghana's revenue base. And these are the things that we should be able to do. They are structural problems, but we have to start from somewhere to be able to resolve it, so that we don't rely solely on external sources to raise revenue, whereby it comes with very expensive interest payments.
To wrap it up, Emmanuel, earlier on you talked about the need for the Ghanaian government to submit a proposal or a plan that can drive its policies and attract the needed agreements from the creditors, so to speak. So I remember that the Finance Minister, Ken Ofori-Atta, said that government aims to present a proposed plan to official creditors next week. That's what we're looking at. So what are your expectations? What do you think should form the fulcrum of that plan? And of course, can it further drive home intentions and make the creditors agree to the deal? We also want to look at probably issues like impediments that might be a clog in the wheel of the progress that, of course, the Ghanaian government is hoping for.
I think my expectation is that government should be able to present a very credible plan. And what is a credible plan? A credible plan will be a plan whereby, in terms of how much you want to raise and how much you want to disburse in interest payment, that should be credible. The investors should be well assured that indeed, if I am committing to debt restructuring, whereby I'm going to reduce coupon rates by a certain percentage, whereby I'm also going to look at my maturity rate and in most cases elongating my maturity rate, then it must be credible. Government should be able to present a plan that will be able to look at how best they can pay interest on time. As I mentioned to you now, since December, Ghana has suspended payment on external debt. And so the plan that government is presenting, I think the one word I will use for that plan, it should be a plan that is very credible.
Emmanuel Amoah-Darkwah, partner C-KADD Global, thank you so much for talking to us.
Thank you so much for having me. It's a pleasure.
At the end of 2022, Ghana's debts were $5.4 billion of the $20 billion external debt due to be restructured. Now, the total external debt stock was about $30 billion. So as the restructuring deal gathers momentum, Ghana is said to be on the track to lower the fiscal primary deficit on a commitment basis by about 4 percentage points of GDP in 2023, with, of course, spending remaining within program limits. So let's hope that Ghana will be able to meet the mark as is being expected by all. We'll go on a short break. We'll be back with more on Business Edge. Don't go away.